Hi, welcome to my daily market report, report that focuses on mortgage rates, and we touch a little bit on stocks as they do correlate with one another. I'm Mike, and I am a loan officer with a national lender. So if you guys got questions regards mortgages or the trends, or even about these reports, or need assistance with any refinance and purchase deals, we'd love to be able to help you guys out. Please feel free to reach out. Without further ado, let's kind of touch on what's going on with the mortgage rates today. We'll start with the economic report. We got kind of a light day in the economic reports today that's been released. We got the wholesale inventories month over month for the month of January. So in December, it rose 1.3%. Forecast was that same unchanged pattern, 1.3, and it came in exactly at that 1.3 across the board. So came in expectations. We kept the pace of 1.3% in December as well as January, and we'll have to see what February does. But these are kind of minor reports, so it doesn't have much bearing um, on the markets. So let's go ahead and take a look at the headline news. Stocks are a little mixed today. We got the Dow up over 500 so far. We got S&P up, and Nasdaq is the only one down. So the stock market is going through a situation where it's not so much taking money out of the market; it's more repositioning itself. With the higher yields that are increasing at this pace, tech stocks are going to be overvalued in their view, and they're moving these funds more probably in the financials, like your banking and stuff, to people like and energy. So you're going to see those repositioning of funds in the markets. Now, we also may have people buying in there. They may like the rates with the higher rates on the yields that they may start buying into those as well. So that sometimes will help us out in the mortgage side of things, but we'll touch on that later. Over the weekend, we did have the 1.9 trillion stimulus package pass the Senate. It'll go back to the House and then be signed in. So they're hoping to have this wrapped up probably by end of this week, and then hopefully have the cash stimulus checks out probably by, I think the projections was starting that out by the 22nd is I think what they're hoping for. So we'll wait and see how that how that comes about. I haven't read the details of it yet, but it just kind of passed it just passed the Senate, and that was the big hurdle for the whole package. So let's move forward and take a look, see what mortgage rates are doing. Mortgage rates are down about 9 basis points. We started the morning off much lower. We were up a little bit higher, even breaking even, and then we kind of pulled back a little bit. So we're right now down 9 basis points. It's not enough yet to quite make any changes in rates, so rates would be unchanged from where we left off on Friday. So again, we usually need at least 12 basis points or more for really kind of have any shakeup in the markets. So let's take a look at the yields. And speaking of such, we jumped up to 1.6 now. This is kind of a range we've been kind of watching, 160-ish, 160, 162, I think it was, right in this range here. But again, we're still in that range, and we'll have to kind of wait and see if we're kind of peaking or if we are at the tip of the iceberg. We're at 1.605 right now on the Treasury. So Treasury's yields keep adding more pressure, not only on mortgage-backed securities, but also a bit on certain parts of the stock market. All right, folks, we'll keep it kind of short and sweet for you folks, as today is kind of rather a light day. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.